We're looking at ways that sanctions and rampant uncertainty are impacting the Middle Eastern markets and how that will play into the rising conflict on the ground. For more insight, Chief Market Strategist at ADS Securities, Nour joins us live from Abu Dhabi. Nour, great to have you with me this morning. As you look at the news flow from the close of business on Friday through to today, the Ukrainians and the Russians are talking. They parted ways last night. There's been an advancement in Iraq against ISIS. Small progress geopolitically, but it could have quite substantial ramifications for markets.
Yes, good morning and thank you for having me on the show. Well, basically, despite all of these geopolitical tensions right now, the volatility in the Middle East markets, at least, is still low comparing to the historical standard. And this is due to, we had Ramadan, the Ramadan season, and then we had the holiday for about a week. And right now we have the summer vacation. So basically, the volatility will continue to stay low. And even with the geopolitical tensions in Ukraine or even in Iraq, Syria, and some tensions in Libya, so far there's no big impact on the markets. However, looking again at the not only the regional tensions, most of the effect will come into this region from what's happening in Europe and the US, especially after the GDP numbers that showed up last week, especially in Germany and other countries. So the geopolitical tensions will remain kind of limited at this time, especially with there are enough traders, there is no enough also volume in the markets until we see the end of the summer vacation, and then we might start to see some fluctuations.
No, give me a sense there. In your region, you've got one of the most volatile equity indexes, I think, after Argentina. You've gone from substantial rallies on the DFM to a rout concern over house prices. Where are investors talking to you about placing their money? Are they still prepared to go in locally in the region, or do they want diversification? What's the mood from investors?
Well, you can say it's almost like the same as what happened in 2008, 2009. The real estate market is improving, and despite that, we've seen also a lot of warnings from the central bank of the UAE that the prices are rising in a way that is really but we're almost close to a bubble, that we can say. However, right now the DFM also, I would like to point out, the DFM is investigating about 9 cases about insider trading, or you might say. So this is basically a good news for the region. Again, the DFM is going into a much better corporate regulations and corporate also monitoring. So right now the investors continue to trade within the same region and diversification outside. But the numbers that came out again in Asia and also Europe and the US may lead the investors to continue with the same strategy right now, to continue with the region more than to look for an investment outside. But at the same time, if the numbers in the US, in Europe and in Asia continue to deteriorate, it might also lead the investor to pull out from the markets and to go or to head into the safe haven, which we have seen also since the beginning of the tensions in Ukraine and Russia. So we believe it's going to be within the tight range until the end of the summer for the regional investors at least, and then we might move into another at least in some of the emerging markets. So this is one of the things that the investors in Abu Dhabi or in the region are looking for. But again, the tensions will be
the gains in the region. Hello, Nour, it's Mark Barton. The gains in the region, I mean, they completely outshine gains in Europe, in the US, in other markets. I mean, UAE up 42%, Qatar 29%, Egypt 36%, Bahrain 18%, Saudi Arabia 24%. Why are we seeing those double-digit gains in those markets? What are the reasons?
Well, if you might know, we as ADS Securities, we were kind of like a negative view on the US, but to start with the equities first, we had this sharp gains across the board because of what's happening in the US or across the globe, which is the cheap money or the QEs. Basically, this is what's leading all the markets across the board to post further gains, double digits. The earnings is looking good across the globe. So, but the question remains: is it real, like real values, and what's going to happen once the QE ends? This is the main concern right now. We've been negative on the U.S. in the first quarter and the second quarter. Basically, since the beginning of the year, we've seen a lot of negative data from the U.S. However, the GDP numbers came in plus 4%. But if you look at the number or deeper into the numbers, you had the GDP came in 4% or plus 4%, led by inventories and trade and the trade deficit, which were estimated by the Commerce Department. However, when we saw the actual numbers, inventories grew by 0.2%. The trade deficit, yes, it went down by 7%, but it went down because of the record low in petroleum imports. So what we are looking at right now is basically a revision into in the GDP numbers for the Q3, not for Q2.
No.
Q2 might see some slight revision to the downside. But
no, do you really think we'll see stagflation?
Is basically whether we see a further improvement or not.
Nour, do you really think we'll see stagflation in the US? I mean, you say if the Fed, even if the Fed were to completely end QE in October, you think that it could pick up next year? Really? Stagflation, no growth, rising inflation?
Well, basically, this is what we are looking at right now. If you look at the inflation number, forget the general number or the number from the government. If you look at the food prices, it's almost at like meat prices at record high. So basically, the government numbers are not really right in terms of CPI and the accuracy of measuring inflation. So at the same time, lower growth is happening since 2009. Since 2009 until today, the Federal Reserve growth target has never been achieved. So this is one of the things also to look at. Stagflation is also possible, but at the same time, you have, if they continue with the QE tapering and they end it, as Janet Yellen said, in October, it's going to be bad because they might pop up the bonds bubble, which everybody knows that, but the bonds market right now is in a bubble. That's number one. Number two, if they continue or if they reinvent it, or they continue with another QE again, QE4 or whatever, it's going to be another problem basically, which is going to continue to push inflation higher. So this would be a dilemma for the Federal Reserve: lower growth, or maybe zero growth, or maybe like very low growth, even if it's not a recession, with a rising inflation. So the Federal Reserve may take another approach, just like what happened also last year. We believe that Janet Yellen is convincing the market that we're going at somewhere, but it's going to be a surprise in the middle, just like what Ben Bernanke does. Basically, in January last year, he said in September we will stop QE, and then in September he said no, we overestimated our growth forecast, and we will continue, or we will start the tapering in January. So this is the thing that we're looking at right now.
Nour, thanks for joining us, Chief Market Strategist at ADS Securities, Nour Al-Hambouri.